Is Meesho suddenly becoming one of the most confusing stocks on Dalal Street right now? What you are seeing today could look like panic, chaos, and noise on the surface, but there is deeper logic hiding behind this unsettling move. Welcome to Invest with Sumit. Before we go deeper into this disturbing market story, make sure you like, follow, and subscribe to the channel, because we break down such noise-filled stock market stories every single day for Indian investors who want clarity, not rumors. Today, Meesho stock hit a lower circuit, which means the price fell sharply and trading was restricted because selling pressure became extreme. Whenever a stock that recently attracted massive attention suddenly freezes like this, it creates panic, rumors, and frustration among retail investors. Social media explodes, WhatsApp forwards start flying, and fear spreads faster than facts. But here is where most people miss the real signal. This fall is not random chaos. The unsettling move happened because a major lock-in period ended, allowing a large number of previously restricted shares to enter the market. When supply suddenly increases like this, prices often react violently, especially in stocks where emotions are already high. Think of it this way. Until now, many shares were not allowed to be traded. The moment that restriction ended, liquidity increased sharply. That does not automatically mean everyone is selling, but it does mean the market suddenly has more freedom to move. And when freedom meets fear, volatility follows. What makes this more confusing is that despite today's fall, Meesho is still trading above its IPO issue price. That means long-term conviction has not completely vanished, even though short-term panic is dominating headlines. This clash between logic and emotion is exactly where markets feel the most chaotic. Over the past months, Meesho has already shown extreme swings. It moved up sharply after listing, corrected heavily, and now again finds itself trapped in unsettling price action. Such behavior creates emotional trading, where investors react to noise instead of analysis. And that is where most retail money gets stuck. The real question investors should be asking right now is not whether today's fall looks scary. The real question is whether this move is driven by rumors and short-term fear, or whether it signals something deeper about business fundamentals. This phase is dangerous because confusion pushes people into rushed decisions. Smart investors usually pause during such moments. They watch how the stock behaves after the noise settles. They track volumes, supply changes, and future business updates instead of reacting to one day of chaos. This is the exact zone where fear creates opportunities for some and regret for others. Right now, the Meesho story is not about a single trading session. It is about how markets digest sudden liquidity, emotional selling, and rising uncertainty. And history shows that when panic peaks, clarity often follows later. So the key learning from today is simple but powerful. Markets are noisy, emotions are loud, but logic always works silently in the background. If you find yourself checking prices every few minutes because of rumors and frustration, you are not alone. This is exactly how market chaos feels before it settles. If you want daily stories that cut through panic and noise with calm analysis, make sure you stay connected with Invest with Sumit. We post such market stories every day, and missing them could mean missing the bigger picture.